What's going on, everyone? Shalon Winter here. It is time for another monthly recap. All right, so I'm going to go over what May looked like. As you know, if you checked out my last month's recap for April, I struggled a little bit towards the end of April. And then here in May, I did well. I learned some things, and then I fell off at the end. So stay tuned. Watch the rest of this video. We're about to jump right in. All right, so here we go. Here's my results for May. Here's my spreadsheet that I use. Y'all see me use this all the time. And I have my video on YouTube where you can find this spreadsheet if you want to copy for yourself for free. Now, I do have this covered here, right? Because as you can see, ultimately I had a losing month. And I'm sure you can see in other areas. If your eyes are wandering around right now, you'll see a lot of red. So yeah, if you look at the monthly P&L right there, win rate right there, average win-loss ratio right there. All that spells a losing month, right? So, but you know what? I had a losing month, and it's the first time on these PAs I've had back-to-back losing months. Typically, so all last year's, if you saw my review from my yearly review, I had one losing month, and it's a slight loss. And then I had one earlier this year. So actually, this year, it's funny because May, let's go ahead and get rid of this. Let's unveil what happened here. All right. I had a bad ending. My last bit of trading here. All right. We'll get to that in a second. But what I want to talk about real quick is, no, I did not blow any of my accounts. My accounts are perfectly fine because I have great money management. I don't have to worry about that. And some people might say, oh, well, if you're trading a prop, why go through all this? The ups and downs, just be aggressive, let them blow and get new accounts. Well, a lot of prop firms are kind of combating that right now. They don't want the people that are just going to be okay with that. They want to have traders trade well and move traders live. So, that's one piece. But the other piece of it is I trade my live account with these. Like, I can't just do that because I copy them all together. How I trade these is exactly how I trade my live account. And how I trade my live account is exactly how I trade these. I can't do that on my live account. My goal, I started my live account with $600. And it's been up and down and up and down. And, I've taken some payouts from my PA accounts, put them in my live. Not all of it, but, portion. Deposit in my live, deposit in my live. So I've been growing that live account, and it's been growing and growing and growing and growing. And my goal is by the end of the year, I want to take that to as close as I can to 100 grand. Like, my goal is to have a live account with 100 grand in it that I'm trading. And, it's tracking that direction. I'm well into the 5 figures on it now. So it's doing well, but I can't, if I'm copying them all together, I can't be dumb and break my rules and do things on my PA accounts because I'm copying together, because I can't do that on my live account, right? Like, I have to protect that live account the best I can, especially if I'm trying to grow it the way I'm trying to grow it. So still have all the same accounts, but let's see what happened here. All right, let's just go into it real quick. All right. The month started off fine. And okay, let me backtrack real quick. I know I'm bouncing all over the place right now, but if you remember in April, let's back up to April. So my April and May were not good months for me. Okay. I had some moments. If you remember, I did the recap. I lost, money in April. My win rate was down. I took a payout though, right? I took 15 grand out. So I actually did not take a payout last month for May. But took 15 grand out in April. But April was one where I was like, man, I had to figure out, like, I had this 4-day losing streak. I had to figure out what's going on. Like, there was something happening and I couldn't quite, I was just missing something. So here we go in May. I was like, okay, I think I figured out some stuff. And yeah, it looked good, right? So start off with a loss, couple wins, loss, and then look at this 1, 2, 3, 4-day win streak. So up until here, it was looking good. So let me remove those for a second. That's how I was looking. I was up 33 grand. I was up 75% win rate. Like, the month was looking good. it was looking good. So what happened? Well, man, this is where money management discipline can really, really get you if you break it. Okay. So I was on a streak. I was looking good. I think I got a little comfortable, and I wouldn't say like overconfident, but almost overconfident. Like, I was, as they say, right? The saying is the markets will humble you, right? They'll humble you the second that you get too confident. It was a little bit of that. I never, ever, I'm usually pretty even. Like, I'm pretty even on my emotions. When I'm doing well, I'm usually, there's a great book if you want to read it out there. It's called Peaks and Valleys. And it basically talks about life is full of peaks and valleys, right? Ups and downs. When you're at the peak and everything's going good, don't get too high, because there's going to be a valley at some point. Doesn't mean you're going to hit rock bottom, like things like that. But, there's going to be a time when things are not going so well. So if you're too high, when the things are going good, when the times come that things kind of trend the other direction and they're not going as well, you can get too emotional into it and really mess yourself up. And so the same thing, vice versa. If you're in a rut, in a valley, and things are not looking good, don't get too low, because better times are coming. So, like, I'm usually pretty good about that. But this time I wasn't, because I feel like from April to May, I was like, I really unlocked something here. I think I've got it. Now, I don't, of course, expect to never lose again, right? You're going to lose. But I think I've got it. And then what happened here with this day? What did I do right there? I broke my rules and took a second trade. Why? I didn't accept the loss. Had I accepted my loser here, that would have been at least half that loss, right? Here, look at my notes. This is why you have to journal. You have to do chart reviews. You have to do weekly reviews, all that good stuff, okay? Great framework, terrible entry, caused me to get stopped because I had the wrong stop price. So I had everything down, and I got a bad entry. And so because I had a bad entry, I had to have a tighter stop than what I should have had based on the market, and I got knocked out. So, and then the next day, look at this. So these 2 days, this day I broke my rules. And then this day, what did I do? I went up a contract. I added like a micro or two, a couple micros. So one loss became basically 1.5 losses. So I didn't take another trade, but I added more leverage, which was not good. And then I was like, okay, I can't do that. And actually, May was pretty busy. I had my daughter graduating. I had my son out of town to camp and different things. So the end of May, I couldn't really, and then we also had Memorial Day, the markets. So it was a little bit, I couldn't get as much trading at the second half of May that I wanted to. So you can see the little gap here from the 20th, and then I got the 27th, 28th, and 29th. But you can see my last 3 days here. These are about the size losses that I'm supposed to be taking. And you can see up here, 5 grand up here, minus 5 grand. So that's about the max I should lose, 3 to 5 grand on my accounts. Should not look like this. So even if those 2 days were gone, it was still a pretty good month. So you see how 1 or 2 days can really just mess things up? Like you gotta be. So these days I was like, okay, that's dumb. Like, what am I doing? Let me get it under control. But then what happened? I already had those 2 big losing days. So now guess what happens? You become a little more cautious. Like, ugh. So what did I do here? Missed entry and chased price. Took the trade after it hit the target. Like after price ran and hit the target that I thought that I wanted to take a trade to, I took a trade after that. Like, come on. That's dumb. All right, last one here. Hesitated on the entry, had a great read as usual, and lost on the trade. So that told me right there. What am I saying? Okay. What am I saying here? Had a great read as usual. I started thinking to myself, what's going on here? What's going on? I thought I figured out some stuff here. I know I did. I figured out some stuff. Which make sure you're watching my trade recaps in June, because I will be going over a lot of the stuff that I've figured out. And then I didn't accept my loss, and I leveraged up. And these 2 days basically messed everything else up. And it caused me to not trade here as I traded up here. Okay. So I'm actually not even worried about these losses. Like in April, back here, I felt like I'm losing sync with the market. Like, what's going on? Here, I know that's just me. 110% me. So again, that's why it's so important for you to chart review, recap, weekly recap, all that. You have to keep analyzing, because you have to know, is it the market, is it me, or is it both? Okay. So I just want to show you real quick an example of what this, like that trade. This is one of those trades. This is the trade that I said that I took after it hit my target. So before the market even opened, I'm like, price is coming up here. Like, this is where I'm expecting price to go. It was actually, I don't know why this keeps popping up. It was actually right here, these lines right there, as I was expecting where price was going to go here. See, you can see extremely clear and clean buy side liquidity. This, I could have taken a trade right here, low-hanging fruit. It's the pre-market high right there. So what I was looking at was price to take, this was like the London low. Price came right down, took that London low, ran up here, pulled back into this inversion order block. That could have been an entry. That's typically not my entry right there. And then price came back up above the first presented fair value gap, pulled back into this little fair value gap, came and hit it one more time here. And what I was telling myself was, I'm going to long here and put my stop under this swing. But then if you read here, missed this entry because how small the fair value gap was and used at 10 a.m. Thought price might come back to hit the first presented fair value gap one more time. But this draw up here was so strong, I knew price was going up there. And I should have known price is going to reach here. Yeah, maybe it could have hit this first presented again, but it's definitely going up here. So even if I would have entered here, I could have put my stop underneath here. Look, this is the previous day's high. We went right back into the previous day high, inside the previous day range, basically, and came right back out, looked all beautiful and ran up there. And what did I do? I did not take the trade. But guess what happened? After it hit my target right here, it kept going up. Now, we did have a daily fair value gap right up here. So what did I do? I tried to create something out of nothing. So we came back down, pulled up here, and we had this fair value gap. And look what it did here. I pulled in here and I said, oh, well, you know what? It's going to go up here. Got in and look at what happened. Got stuck on this new day opening gap here. Hit it. So I put my stop underneath here because I was a little bit, conservative. Pulled back down here, took me out, kept doing this. It eventually did what? Went up there. Eventually. But I should have never, ever taken that trade. Ever. So that's one example right there. And then I have another one here. Another one. Price. We had this 15-minute fair value gap that formed. Big 15-minute fair value gap right here. Okay. Right here. This is the 15-minute fair value gap I said would push price lower if it formed. It formed right here. And guess what I did? We had this little move here and pull back in this little fair value gap. So I told myself, I'm not going to go long if we get this big 15-minute fair value gap right here. And we did. But guess what? We pulled back into here and I went long. I went long. Why did I go long? But I had a really good target down here. The high of the old opening range gap, new week opening gap up, in this area here. I really thought we were going to go short. So as soon as this came and created an inversion here and created this fair value gap here, I got out. And I told myself, if we go right back up into this fair value gap, I'm going to short it to right there. See, I hesitated here and did not take it. I wanted to. I hesitated. Why? Because I had already broke my rules those days before. And guess what happened? Well, yep, you can see it. Right here, hit it. I mean, look how easy of a trade that would have been. Let's call it 520 down here. It's a 100-point trade right there. But guess what? I took a loss instead. So those are just some things, those are some things. And like I said, that's uncharacteristic for me. So I just know, I'm not worried about it. I just got to get that. It's fine. Yeah, I did not want to have a losing month, obviously, but it's okay. And that's my first back-to-back losing months. But like I said, this one here, I know that was just me. And I still I have it. I know what I need to do. And, you'll see June, as long as I wouldn't have broken, my rules here, I would have had a profitable month. If I'd have just taken a regular loss, I could have lost 5 days in a row right there. I still had a profitable month. But anyways, so that's my May. Not much else to it, really, to be honest. Lost. And I know exactly why. Chart reviews, all that good stuff. So if you see here, my little equity curve is trending up, up, hit a peak, and then tanked. Oh, man. So anyways, and by the way, I have an Excel sheet that I'm working on that I'm almost done with. That's the same version as this, but it has a few more features on it, a couple more nice little things. And the calendar on that one is 100% accurate. This one, and it's kind of a dynamic calendar, so it'll move around a little bit. This one is just, I kind of put it together quick, and I realized that it's not always accurate. This is not always, the dates are not always going to line up correctly on the Google Sheet one. So the Excel one will be better, but Google Sheets is pretty easy to use and all that, since it's always saving on its own. But anyways, all right. Well, that's it for my May recap. We'll see. We'll see how June looks, how that's going to look. So far, so good. And basically, like I say, I don't worry about the day to day. I worry about the week to week, the month to month, year to year. So since I had back-to-back losing months, I'm just taking it week by week, day by day. But I don't really care what happens day by day. I want each week to be profitable. And of course, that leads to a profitable month. So that's it. All right. Well, I appreciate you watching. That's going to be it for this video. Like I said, watch those trade recaps. My course is going to be out very, very soon. It's almost done for how to trade futures. It's the beginner's guide. If you know what I'm talking about in this video right now at all, if you've even taken one trade with futures, that course is not for you. That course is for somebody that hears about day trading, hears about futures trading, has no idea what it is. They don't know what going long or short is. That course is. That's who that's for. I'm working also on an advanced trading course, how I take my trades. Okay. And that keeps getting updated, right, with the things I'm learning. But I'm trying to make it a 1, 2, 3, if this, then that type of trading, how to trade. It's like actually what to look for, how I do my framework, my executions, everything like that. Obviously, it's all based on ICT concepts, but it's just how I trade it. That's going to be free. And then I also am working on my psychology and discipline psychology course. That'll be coming out. I wanted all those to be out earlier. It's taking some time, but I'm actually putting a lot of good effort into it. It's going to be a good course, all of them. So be on the lookout for the advanced trading, how I trade, ICT concepts, and this discipline psychology course. Be on the lookout for that within the next, I'd say, couple months. One last thing here, as to show you, I just took this screenshot. 172 days, 170. These are my trading days on still the same accounts. Check months and months last year if you want to. Anytime I've shown my PA here, all the same numbers, 53 through 72. All the same accounts, same sizes, same everything. And here's my trading days. So, yep. I don't blow accounts. I haven't spent any money on accounts in over a year now. So, well, let me say it's not over a year, but because of blowing accounts, it's been over a year. I haven't blown an account in over a year. So I've added accounts because obviously, as you know, I didn't start with 20. It was 3, then 2, then 3. So yeah. So that's why the days, go lower, because as I've added accounts, started with 3, then another 3, then another 3. You can see it right there. Then another 4, then, so I just kept adding on. So anyways, that's it. Thanks for watching. If you're still here, please hit that like button. If you're not subscribed, go ahead and subscribe. Lots of good content is rolling out. So, hey, keep that discipline, keep going, and you'll make it. Put the probabilities in your favor. And that's how it's done. So, all right, until next time, I'll see you later. And as always, trade well, everybody. Take care.